Hey everybody, July 31st, 2025, here with your nightly watch list video and daily recap. I apologize, I did not get the daily recap out sooner. It is my fiance's birthday tomorrow, so I was out getting some gifts and whatnot. So, sorry I did not get this out a little bit sooner, but let's just talk about a little bit of what happened today in the market. You know, yesterday you had the big move in after hours after FOMC. FOMC was a nothing burger. We knew that there wasn't going to be a rate cut. There wasn't a rate cut, and the market started to move lower. I think the market's just like looking for any excuse to digest, and that's what happened in after hours. Or really before the market closed. And then in after hours, you had the huge gap up on Meta and on Microsoft, and, you know, right as rain, similar to SoFi. Today, this morning, you had a Roblox right from the jump, effectively. We can take a look at that. Very similar to SoFi, you just had all-day unwind in this Roblox. You had big gap up, all-day unwind. SoFi did something very similar, except that one obviously had the offering. So, you know, big gap up, all day unwind, you know, offering was absolutely fantastic on the short. And then Microsoft, literally no bid today. You know, huge gap up, zero bounce, didn't even try to bounce, huge sell off, you know, just steady trickled lower, zero bounce in it. And it was just the same thing across the board. ARM, you know, gap down on earnings overnight, and then continuation lower. You had SMCI getting hit all day, fade. And look at the daily. I think the daily looks completely fine in an SMCI. There's been some nice accumulation in here, and, you know, nice move higher. This is like the equivalent of $600. So you've done a nice job of kind of getting to the midway point of what was the highs on an SMCI. A-Lab, big volatility, but, you know, hung in there pretty well. AVGO a little bit lower today. You know, effectively, if we just take a peek at the SMH, you know, you did get a little bit of some distribution near these highs. So, do I think anything is broken? No. Do I think things need a few weeks of digestion? You know, I've been kind of saying that now, it seems like for a while, and I think when you kind of look at the ES or you look at the NQ, we're going to need some time here, guys. You know, it's good to, it's not that we're not in an uptrend. We are absolutely in an uptrend, but the reality is where have you come from, right? You've come from, you know, a 30, 40%, 35% move on the ES, 40+% move on the NQ. You know, you've come from quite the way down, 44% to highs. You know, it's gotten a little bit long in the tooth. And, you know, you just keep even these, you know, like quantum stocks. You had this really nice news out from Microsoft saying, you know, quantum's the next big frontier. And then, you know, you just look at an IONQ. You're now, you know, hanging out below the 50 simple moving average. I know some people will look at this and just say, oh, no, it still looks fine, still looks like digestion. You know, do I need to pull up Duolingo and show you what happens when a stock starts losing its 50 simple moving average? You know, you could just start to really roll over. I'm not saying that IONQ is going to do something similar, but, you know, they're just a science experiment. So, you know, my guess is, yeah, these start to do something a little bit similar. You know, you had Rigetti with a nice little push up this morning, and of course I'm sitting short and thinking to myself, well, the day that I shorted 729, you know, the highs is my stop, so $16. And you got very, very close to that, and then by the grace of God, you started to roll over. And obviously that was due to the market, to which I always say, you're not a genius, it's just the environment you're trading in. So if the short side is what you were doing, the short side is what was being rewarded. You know, even if that just means for the short term. So just good to keep that in mind. And it was a lot of what we've been seeing lately. Shaq caught my attention today, gap down, big on earnings. Yes, tried to find some support at the rising or really flattening 200 simple moving average. So there's a little bit of a positive, but just massive, massive pickup in volume. I believe this uptick here was Mr. Josh Brown on CNBC talking about Shake Shack, if I'm not mistaken. But it's just one of those days where, you know, you're in an uptrend, but you know you've also gone too far and you're probably not going to go too much higher without some serious digestion. Rocket Lab, a bit of an unwind some more in after hours. ASTS, some continued digestion, and this is looking a little bit sloppy up here. AEVA was a big winner, a former big winner, and this one just is kind of, starting to put in what we call the old famous Christmas tree pattern, right? You were at 38, now you're back at 18, and this is what happens if you think you can get a little patient with these positions. They go down 50% very, very quickly. So it's gotten kind of ugly in this one too. Obviously, there have been some names that have been acting pretty well. A Reddit with a really big gap up overnight, but no. With the way things have been acting these last few days, with looking at, a Microsoft, with looking at a SoFi, with looking at a Roblox, with looking at some of the earnings gap downs, I'm not a buyer of an earnings gap up right now. Could you play a high volume close? Yeah, but that would require you just sitting on the sidelines all day tomorrow, letting it push if it wants to, giving you a really nice pickup in volume, a high volume close, and then you can come for it, on Monday or Tuesday or Wednesday, whenever it gives you, that pivot back through the closing price. So that is kind of something that I would be waiting for right now. Coin, another notable name, down big on earnings, and you could kind of see it once this thing hit, this high up here, this IPO high. I know Gil Morales is probably having himself a field day seeing this price action. You kind of get that $429 and change. What was the high here? $429.54. I'm off by about $1 with my line, but it doesn't really matter. You get the picture. You kind of get up to that level, and then it's just been a down day every single day, and now you're down at 343. It's not broken by any means. You're still well above the 50 simple moving average, but guys, that gets, if you get cute and you think you just want to hold on to these things in perpetuity, you're now down 20% off those highs very, very quickly. So don't marry anything in this environment. Please make sure that you're taking some money off the table on pushes. What was the other one? The battery name, ENVX. I kind of mentioned it into the room. Not surprised, even in the slightest, that this acted the way it did on earnings. Right, you reminded me a little bit of QS. They are in the exact same sector. You post earnings, and we can just go ahead and take a look at this one for earnings. Right, you had this little shove, and then just a complete fail, and then you had this little bounce. The next morning you had a push. Does the NVX do something similar? Well, my guess is yes, probably. Maybe another little push into this 13s level, and then for a failure, probably all the way back down right to the 50 simple moving average, and then some right again. So it's just kind of the environment. These names have never really been some awesome cleanup trenders. The market is probably more so on the tail end of this beautiful, beautiful 3.5 month bull cycle. I hope I'm wrong, but the reality here is that a 42, 43, 44% move for the NASDAQ is quite a bit. And I talked about it during pre-market prep. Guys, when things are just going vertical, you cannot get FOMO and think you're going to start plowing into a bunch of new longs after the market has made a 40% move. Please remember this. The best time to buy longs is after a correction, not after a 40% move in the NASDAQ. Okay, so the best time to buy tech stocks, some more growthy names, some small and mid caps, is after the market's had a correction. And then you go looking for the stocks that have had the most relative strength. And that's how, back in early April, mid-April, I was getting myself positioned in a name like Netflix. I was looking at a CrowdStrike and got into CrowdStrike. I was looking at Spotify. I was looking at Hood. I was looking at Palantir. I was looking at Tesla. I was looking at NVIDIA at $99.50. And the list goes on and on. CLS at 100, which I owned. So it's like the best stocks will hold up best during a correction. And that's when they really stand out. Well, when things start to go up 40%, as they have in the NASDAQ, Now's not the time to get uber bullish. Now is the time to make sure you've paid yourself some, look for names that are continuing to hold up well, but expect either tons of volatility or the market to naturally pull back. And even if the market pulls back, I said it today, like today's action isn't negative. It's healthy and necessary, right? You get a move up, and then you get weeks and weeks and weeks of digestion, and that weeks of digestion help you find the next names that are already starting to push higher during that digestion. But it's really like saying, you know, there's a train, it's in motion, and you're trying to hop onto that train while it's in motion. That's the quickest way to kill yourself. So now what do? You wait for the train to stop at the station, and that's the consolidation, and then you can hop on board when the train is either consolidating, right, which I know some people like to do. They like to accumulate positions during that consolidation, which I think is totally fine if you know how to do so and can limit your risk if you're wrong. Or just as the stock is starting to break out again and quote unquote leave the station after a clean digestion, then you can go ahead and try to hop aboard a now renewed moving train to its next destination. I made that analogy this morning. I know some of you appreciated it, so I'm making it again. And that's a really good way to kind of think about how stocks move. They don't just go in straight vertical lines, and that's what a bunch of these stocks have done recently. The best names, Roblox, right? Just absolutely vertical every single day, right? No real digestion here. Small little digestion here, and then a gap up on earnings, and then it got a little too much, and then sold off, right? SoFi did something similar. Microsoft did something similar, right? You get the gap up on earnings, and then you just trend above the 10-day the entire time. Then you get another gap up, and then you just get an all-day sell-off, right? And this isn't the beginning of a move. It's probably towards the later stages of a move, and now you just need to digest. And if you go back and look at an NVIDIA from way back when you had this gap up at $50 or 500 at the time, this is kind of what it ended up doing, right? You get the gap up at $50, right, on earnings, and then it just goes and proceeds to consolidate, right? You've already been making this massive move. You get this gap up at 50, and then you just go to consolidate and finish out building a really long base. And look at an NVIDIA, just a super prolonged uptrend, gap up on earnings, and then you think you're going to get another gap up on earnings, and then that's just kind of the moment where the market goes, okay, now it's time for some, you get this huge move, and now it's time for some much longer digestion, right? So is that what is coming for a Microsoft, a Roblox, a SoFi, maybe a Reddit tomorrow, etc.? I think so. I think that is what would be healthiest. I'm not a buyer of stocks at the moment until things prove themselves a little bit more. And the reality is I know that my risk reward is not skewed to the positive side right now. I still continue to have a long and arc, did absolutely nothing with this thing today, and it is gapping down just a touch on me, but I'm going to hold this. And so long as we, don't have two closes below the 20 simple moving average, I will continue to hold on to this. I've been owning this name since the beginning of last month, so almost 2 months now. CCL continues to be fine, but obviously dragged down today by RCL, so not being very friendly. You gap down on earnings. You thought you were getting bought up. You're buying the dip. Oh, they're buying the dip, and then you're just selling off. So this is no good. This is a former leader. I don't think anything wrong with it. I think it could come right into the 50-day and maybe bounce there, but it is affecting my CCL a little bit. I still own IBIT, and of course we are gapping down a little bit as well. Let's see if we can hold on to the 20 simple moving average. I still have my long in Oklo, and this one did go see a new high, $80 plus, which was super nice to see, and then you just sold off the rest of the day. And again, you're not a genius when it's selling off. The market's just selling off, so everything's just selling off, right? It just is what it is. And then Toast I still have, and of course, a bit of a sell-off into the close, just like the rest. Daily still looks fine, just been kind of surfing this 10-day. Earnings coming soon for this name, and then I do have a few shorts. I still have Joby, and I shorted this thing last Monday. My mistake really was not having shorted an Archer, and this one's acting a whole lot more poor. I still have Rigetti, and I got a little bit lucky today with the market being so weak. This thing ended up rolling over because I shorted it on the 29th. And then I still have SoFi, half my position, which I covered yesterday near the open when this thing kind of started to shoot out of this little consolidation. So feel pretty good about that, but I will continue to see if the market is giving traction on the short side, not the long side. And if I'm being stopped out of my longs, I want to make sure I'm being proactive of, one, tracking what is showing relative strength, and then two, being proactive and playing the side of the market that is paying me. If it happens to be the short side, it is what it is. I personally do not care, but I am prepared for both sides of the market. Like I said, I don't have a ton on the radar that I think looks buyable. There are names like Dash that are just holding in there pretty well, and I talked about this on last night's Watchlist video. 248 was pretty nice, but I'm not too interested in owning a name that's an absolute turtle at this moment, just in this market in general. I thought Tesla was going to be pretty decent if we can get back over the 50 simple moving average, effectively breaking over yesterday's highs, but we did not. We did the exact opposite. We rejected the 200 simple moving average today and just trended lower all day long. AVAV I thought was pretty good, and it did nothing wrong today. Still kind of just keeping it on watch. The problem with an AVAV is it's in the aerospace and defense sector, and there were a few stocks showing some pretty big weakness today. Notably, DRS was one of them. Back-to-back days of just disgusting distribution because of earnings, and then HWM, if I'm not mistaken, was the other one. Down as well on earnings. Not all of them act poorly. KTOS still looks fairly decent. This is just flagging up here. Ideally, the more sideways, the better, but this one will be coming up to earnings here pretty soon. We will see how it acts when that moment arrives. But ultimately, I don't really want to do too much in this environment. I still think BABA looks pretty good, but it needs to get over 124 for me to be a buyer. And again, there's just not enough out here for me to be a bull. I'm a bull on the positions that I own. I'm not a bull on too much new merchandise here. That's just my reality. People can always do what they think is best for them. But, until we get longer digestion, until we get cleaner setups, until we get deeper pullbacks, maybe pullbacks into the 50-day on these humongous trends, the first pullback into the 50 days, typically pretty buyable. But, again, you could see what happens to a Duolingo when it loses the 50-day. When something loses the 50-day, it can get pretty nasty from there. And when it loses the 200-day, it can get even nastier. So Netflix is another example of what can happen when something loses the 50-day. It's like the bids just disappear. And even today, this thing washed all the way out, a little bit lower, 1150s. And I sold this thing on 610, right? So had I gotten cute with it, I would have eventually given back those gains anyway. So no harm, no foul, kind of looking back at where I sold it now. Even a Spotify kind of looking pretty disgusting. So yeah, it just is what it is at the moment. I do have some short ideas going into tomorrow. We will see if this little pushback up in TSSI was a gift. I do think that it was. You get this kind of nasty 2-day move down, you get a rip right back up to those levels, and then start to act weak again today. If we could take out, today's lows, I would be wanting to short a name like this. This one kind of feels like it's going to play out very similar to AVEA or even a AEVA or even a OUST. So you get these like younger growth names, that just made these insane moves up, and then you start to unwind quite a bit of that before building out a new, longer, better base. So hopefully you guys found this video helpful. Sorry that it had to be too long. Apologies that I didn't get this out a little bit sooner, but those are kind of some of my thoughts going into today. Just be patient, wait for cleaner setups. When you get the absolutely incredible market that we just had for the last 3 months, the last thing you want to do is get too tilted to one side. You just get so overly bullish, you can't even think about the other side. In April, I was getting so paid in February and March, and all I had was 7 short names open. And then all of a sudden we get to April, and I was being asked, like, Ariel, are you seeing any more short setups? And I said, I don't want to take any more shorts here. I've already been paid on the short side, and I'm starting to get stopped out on the short side. Well, now I'm starting to get stopped out on the long side. I'm not getting much traction on the long side, and I'm starting to see things break down. Whether it's a name like Duolingo or an Oster or an AVEA or you name it, a QS, or seeing the euphoria in an open door, or a KSS. This KSS doesn't happen at the beginning of a bull market run. It happens near the tail end. Open door. I mean, where the hell's Eric Jackson? Somebody send out an EPB for Eric Jackson. Where the hell's he at? He said this thing was going to 82. Look at this squeeze. This thing's going to be back sub 1 before you guys know it. Where the hell's Eric Jackson at? Somebody, please find him. But that's just kind of the reality. You don't see these mega moves on turds at the beginning of a bull run. You see it at the tail end. I'm not saying that the market won't eventually go higher. Of course, I do think that the market will eventually go higher, but you need some digestion. You want to try to hop on a moving train? Be my guest. But that's to each their own. Like I said, I still have some longs in ARC. I still have CCL. I still have IBIT. I still have Toast, and I still have Oklo. So those are great for me. I will continue to let those work, but I'm not out here to get myself involved into too many brand new longs. It's just not going to happen. I am still focused on seeing if I can get myself positioned in the short side and tracking relative strength. So that's all I'm doing from here. I'm going to have a pretty short day tomorrow. I am going to go enjoy some Six Flags in the middle of the day and get off my desk early and go enjoy some roller coasters. So hopefully you guys have an awesome day tomorrow. I will see you guys for pre-market prep and then for about the 2 first hours of the open, and then that'll be it for me going into the weekend. So hopefully you guys found this video helpful, and I will see you all bright and early in the morning. Cheers.